Hello, 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 everyone. Welcome to this pre-recorded session. My name is Kola Kolawole, and I am your host this morning. This is a session before a session, so the pre-recorded session before the webinar. I'm conscious of the fact that we're going to have a panel at the webinar, and so I may not be able to expand on some of these concepts in great detail. So I decided to do a pre-recorded session which people can watch at their convenience. And the topic for today is becoming your own banker using the infinite banking concept, which was coined by the late Robert Nelson Nash and disseminated through his book, Becoming Your Own Banker, which you can get a copy of from Amazon, or you can get the audio version from audible.com. Incredibly powerful book. I have both the audio and the text version. And it's a concept that my wife and I have deployed. We got to know about it much later in our journey, in our wealth building journey. But like I always say, it is better late than never. And for anyone who'll be watching this call or this pre-recorded session who has a lot of runway time, both in life, whether you're in the spring season of life, which is 0 to 25, or your children who may be in the spring season of life, or your beneficiaries in the spring season of life, 0 to 25 years, and those who are in the summer season of life, 25 to 50. This is an absolutely important concept to learn about, get familiar with it, and as you get income and capital, deploy it to starting this banking. Basically, use your capital to buy what I call uh, bank branches and buildings. And this whole process is anchored or underpinned by an incredibly powerful asset class, which I call the crown jewel of the insurance asset class, which is especially designed, dividend paying, participating whole life insurance with strictly with a mutual insurance company. I am not talking about term life insurance. I am not talking about universal life insurance. I am not talking about standard whole life insurance. We have been around the mill. We've basically had all those forms of life insurance. Had to cancel our universal life insurance. Again, don't get me wrong, I'm not an insurance agent. And I have nothing against all those other forms of life insurance. I think they might be appropriate depending on where you are in life, what your understanding is, what your long-term goals are. But for us and for many other people, in fact, I dare say for many people that know that this is what they need, this infinite banking process has been a game changer in our wealth building journey because it gives you pre-retirement benefits, retirement benefits, and post-retirement generational wealth benefits in such an incredible way where you have a capital reservoir that is growing, that you have total control of, and that compounds while you are fast asleep, where you have easy access to the equity on your own terms. On your own terms, you have absolute control of the equity that grows in this specially designed type of policy strictly with a mutual insurance company. A mutual insurance company essentially is an insurance company that is set up where the policy owners are the owners of the company. They are the co-owners of the company. There are no shareholders. So all the benefits of the company, the growth, the profit sharing comes straight back to the policy owners who get benefits, multiple, there's three-layer benefits that I'm going to talk about today. So without uh, spending so much more time on introducing this, I will pull up my slides. Let's see if we can share my screen. Let's see, here we go. Okay, hopefully people can see my screen here. I'll put myself in the middle or minimize myself here. From time to time, Okay, let's get rid of this floating meeting controls. Okay, I'm hoping that people can see my screen. So today I'll be talking about capital. We all agree that we need capital, bearing in mind that capital is not just financial capital. Financial capital, which is money, is an incredible form of capital that we all need for our day-to-day lives, for acquiring income-producing assets, for making a difference in the lives of our families, our friends, and people in our circle of contact and influence. But capital is beyond that. There can be spiritual capital, mental capital, physical capital, relational capital, occupational capital, financial capital, which is what we'll focus on today. And you could also have capital that is generated by the environment and the time that you are in. For instance, you definitely have more time capital if you are in the spring or summer season of life. So let's dive straight into it. I'm describing the topic for today as the triple C of infinite banking for wealth building and looking at the infinite banking concept and how there's a synergy between this infinite banking concept and the income producing assets. By way of introduction, I am an active infinite banker now. I wasn't before, but I have seen the light and I am passionate about sharing this with as many people as possible. I'm a specialist physician, an educator, both formally and informally. I'm also an investor. I invest in as many asset classes as I would mention here today. I've been investing in real estate for over 25 years and many other asset classes following on from that. And most importantly, I am a lifelong learner. I'm passionate about learning. I believe that learning is what keeps us fully engaged and more importantly, keeps us fully productive in the art of making a difference in the lives of people and in the environments we live. I'm also the director, co-director with my wife of the repayment group of companies and also the inspired founder of the Triangles of Impact series and services. Today's topic is becoming your own banker using the infinite banking concept as part of the financial empowerment series that we will be sharing from time to time. At the upper and right-hand corners of this slide, you would see two purple QR codes. These QR codes, please feel free to scan them, enter your details. We have a mentorship, coaching, and consulting program. And if you want to express your interest to get some benefit from them, please kindly fill out your details and we will definitely reach out to you. We'll first reach out to you with a questionnaire. That questionnaire would help with classifying you in terms of your investor profile, whether you're early or beginner, whether you are intermediate, whether you're experienced, or whether you're an advanced investor, and would help us to tailor the education and information and signposting that we provide to help people along their wealth building journey. So, briefly about my wife and I, we are both specialist physicians. We met in medical school about 36 years ago, and we've been married for 25. Hallelujah. This year would be our 25th wedding anniversary, and we're so excited about it. And we are the Ribcall couple. My wife's name is Rebecca. My name is Collar. So you can see where Ribcall came from. I am a general and forensic psychiatrist, and she's a diagnostic radiologist. I'm also the head of service for one of the mental health and law programs in the country. And I'm very passionate about human health, spiritual health, mental health, especially since I specialized and subspecialized in that area, and of course, physical health as a physician who is a medical doctor for both physical health problems too. And my wife is passionate about being, at the center of diagnosis and treatment. As a diagnostic radiologist, we are also mentors in this area for people who are interested in medicine, especially youths and young adults. So if you have youths and young adults who would like to connect with us, to be able to get some encouragement and inspiration on pursuing a healthcare journey or a healthcare career option. We have lots of stories and lots of encouragement to provide in that domain. And we are focusing today on what I call the wealth building framework and one component of that wealth building framework. So I'll talk briefly about a wealth building framework that I put together from my experience and exposure to real estate investing using a multifamily um, investing structure. But we'll really be focusing on the benefits, the banking, and the benefits, the banking, and the basics of the infinite banking concept and how you can become your own banker and make that a source of readily available capital and income, regardless of where you are in your journey through life, regardless of how much capital you have. This is really what makes this concept stand out from things like immediate financing arrangements, which is mainly for high net worth individuals. This is what makes this stand out completely from term life insurance or universal life insurance, because it really kind of occupies its own space and is accessible by everyone and is a incredibly powerful generational wealth building tool and process that serves you in your pre-retirement phase, serves you in your retirement phase as an income generating machine, and serves you in the post-retirement phase when you have translated from this world to the world beyond, and really then provides significant tax-free leverage for your beneficiaries. So we'll also talk about how to control and compound capital for income-producing assets for your general expenses and also for the wealth transfer. And I'll be going through disclosures and disclaimers, talking about capital control, compounding, liquidity, equity, and leverage, and how you can establish your own bank branch and buildings. I describe each policy that you take out on yourself, or that your corporation takes out, or that you take out on your spouse, or you take out on your children, or you take out on anyone that you have insurable interest on. I describe each one of them as a bank branch and building, and I'll explain why. I'll actually illustrate why, because I'll log into two of our bank branches and buildings, which is two of our policies, so you can see how seamless it is to access capital, to grow capital, and to access the capital with no questions asked, really at the stroke of a pen, as my older brother would say, or at the push of a button, as I will demonstrate this morning. So let's proceed. I always start my presentations with a passion that I share, that we share, that humanity shares, and that's to constantly remind ourselves of how precious we are, the fact that life is irreplaceable, it's invaluable, and the most important asset class here on earth is what I call the human asset class. I've also called it the human real estate, which is your spirit, mind, and body, your relationships, occupations, and finances, and how that cannot be replaced by anything else. And so, thinking about the most precious substances here on earth, nothing even comes remotely close to a person, an individual, or people. But if I must try, I would say diamonds could potentially reflect how precious we are. And that's why I often have this slide embedded in my presentations. And I usually have, a diamond crystal that I carry around just to remind me uh, in my interaction with people on a day-to-day basis of about how precious we are. And I love to share this with people to remind them that first and foremost, you are precious. If you're part of the audience today, you're precious to yourself, you're precious to your loved ones, you're precious to society, and people around you are precious. We are precious. It should be a guiding principle that we all live by. It helps us to give people a benefit of a doubt. It helps us to go above and beyond. And in a world that is plagued by conflict in certain parts of the country, this is something that we need to remind ourselves of constantly. And that flows right into our mission statements. For my wife and I, people really are the apex of what we do as physicians, as investors, as educators. And education is really at the bedrock of that, because I believe that with education and information, people become empowered to make positive impact, I believe that with education and information, people get encouragement and inspiration. And I'm hoping that this pre-recorded session would be a source of encouragement and inspiration for anyone that watches it. And also, there is a significant place for entertainment and influence, whether you're hosting people out, whether you're providing food, clothing, or shelter, or whether you're just providing some kind of comic relief. uh, Entertainment and influence also has a significant part to play. And that also feeds into the last EI. So I have these EIs that form our mission statement. And the last EI is that whatever you enjoy, whatever you have truly come to enjoy, please make it a point of duty to invite other people to enjoy it. There's no point finding something that is precious, that is making a difference in your life, and then keeping it to yourself and not looking for avenues to share it. So please, let's all continue to encourage and inspire ourselves, educate and impact ourselves, empower ourselves, entertain ourselves, but most importantly, invite other people to enjoy the benefits that we enjoy in the various endeavors of life. It's important for me to add a few disclaimers here. I don't have any conflicts of interest. I am not an insurance agent. Uh, I am simply passionate about what I have come to know, what I have come to experience, what I've been exposed to, and what I currently practice and I'm enjoying. And therefore, I have to invite other people to enjoy it. But it all starts with education and information. Part of the disclaimer is to also clearly state that no professional investment or accounting or legal advice is intended by this presentation. It is strictly educational and it is provided on this basis. Please consult your legal, accounting, and financial advisors for as much advice as information as you require. Do your due diligence always. And although I will be making some brave and bold statements today, these are simply from my personal and professional experience and exposure, and they do not constitute financial advice for anyone that may be watching this pre-recorded session. So I always like to start with questions. So the first question that I have for everybody who would be watching this now or later is, where are you in the journey of life? I often talk about our JST, that we all have a JST, which is a journey through life. And everybody has a story. S stands for story. We all have stories that accrue as we journey through life, and we also all have testimonies. And testimonies really refer to victorious points and victorious milestones, or milestones where we have a bit of an aha moment. I know I definitely had an aha moment when I finally found this infinite banking concept and the specially designed dividend-paying participating whole life insurance that underpins it, which is anchored in a mutual insurance company's system. So where are you in your journey? Just want you to spend some time to reflect at this point. Are you in the spring season of life, which is age 0 to 25, or do you have children who are in the spring season of life? This infinite banking concept is for them. You need to consider taking out policies on them. You would be the policy owner if they are still dependents, and you'll contribute capital that grows seamlessly while you're fast asleep and begins to compound exponentially as you continue to contribute your premiums. And this becomes a reservoir, an easily accessible reservoir of equity that becomes liquidity and that you can leverage for the acquisition of income producing assets and the expansion of your wealth building portfolio. And the purpose is so you can make a positive impact in the lives of your children. You can make a positive impact in the lives of those in your community and those in your circle of influence. So 0 to 25 is the spring season. 25 to 50 is the summer season, or we could say spring is the morning, afternoon, evening, and then sunset. And 50 to 75 is the autumn season, which is where my wife and I are. I also describe it as the third box of life, which means each box of life has 25 small boxes. The first box is spring 0 to 25. Second box is the summer, which is 25 to 50. The third box is autumn, which is then 50 to 75. And the fourth box, or what I call the bonus box, is uh, the winter season, which is 75 to 100. So it's a good point to reflect and to also ask ourselves, where are you in terms of the balance between active and passive income along this continuum or this uh, journey through life? I also want to spend some time to just encourage people that when people talk about financial freedom, it's a term that is used quite loosely, thrown around from time to time, especially when people are listening to talks about wealth building like this. But my point of encouragement is to highlight the fact that there is relativity in the financial freedom journey, which means that people achieve various levels of financial freedom as they go along their journey. So it's not just one destination, but it's a series of destinations. So if you think about it, one destination of financial freedom would be when you have put together an investment that has grown to the point where you can generate income that covers your general expenses and bills. So that could be one level or one destination in your financial freedom journey. Or it could even start lower than that when you have enough passive income from your investments, be it investing in the infinite banking concept or other income producing assets, and generating enough passive income that it's enough to cover a few of your bills, maybe not even all of them, maybe some of the bills that will follow you to the gates of heaven. I always talk about there are certain bills that will follow us to the gates of heaven that would always need to be paid. Um, so if you think about financial freedom that way, you will feel encouraged as you begin to invest and as you're achieving each milestone. So first milestone is to generate enough income to cover those critical bills that will follow you even into life in retirement. So things like your cell phone bill, your utility bills, and things like that. And then you generate enough passive income that would now cover all your expenses, all your bills. And then you generate enough passive income that would now be able to cater for your immediate family, your friends, people in your circle of contact, regardless of whether you still earn active income. And then you generate enough passive income, again, by building a formidable portfolio to now be able to create what I call the blessings of the basket or the blessings of the storehouse, where you're now able to set out to make significant impact in the lives of people around you. And this can be done. It's definitely achievable. So we'll go on from that to the next question that I have for everyone in this presentation is, what is an asset? And there are lots of people who have put together different definitions of an asset. I have spent some time over the years to reflect on this very important question, because we should be investing more in assets than in liabilities, because assets have a number of qualities or characteristics. So I came up with 10 powers of an asset, or 10 qualities or characteristics of an asset. Now, there are some assets that may not have all these qualities, may not have all these characteristics. They may have some, and they may not have others. But I would expect that a substantial asset class, or an asset class that can be part of your wealth building, or should be part of your wealth building portfolio, should have at least 5 out of these 10 qualities or characteristics. Well, I am happy to report that the specially designed dividend-paying participating whole life insurance that underpins the infinite banking concept has all these 10 powers or 10 qualities of an asset. The other asset class, which is in the foundational asset class group, so I would say the insurance asset class is the footings and foundations of a building, or of a wealth building. And geographical real estate is also in the footings and foundations of a wealth building. And I always say that the multi-family real estate is also a formidable asset class, an income producing asset class that has these 10 qualities or characteristics. And what are these 10 qualities? So if anyone ever asks you what's the definition of asset, if you're able to reel off at least five of these qualities, you would be capturing what an asset is. The first is an asset should be able to store value. It should be able to store value. It shouldn't just be a flow through of value. It should be able to hold value. And the ability of an asset to hold value or store value is what we call equity. So it builds this power of value that is stored within it. And the other quality of an asset is that it should be able to grow that value over time. So it should have a mechanism within it, whether it's the mechanism that has to do with demand and supply, or whether it's the mechanism that has to do with the fact that it's a solution provider. It should be able to grow over time. And that growth can either be passive appreciation or can be active appreciation. And then an asset should also be able to pay you. It should be able to generate income. This is the one that Robert Kiyosaki focuses so much more on. He believes that an asset should only be an asset if it's able to generate income. My opinion obviously differs slightly. I believe that there are certain assets that hold value, may not necessarily generate income, which is cash flow from it, but they're still an asset. But a good asset should be able to generate income or should have the ability to be leveraged for the generation of income, which means you should be able to borrow against it. It should have the potential to stand as collateral for you to leverage it to then generate income. And this infinite banking concept using the dividend-paying participating whole life insurance definitely ticks the box of storage of value, constant growth while you're fast asleep, and also being able to generate income through the use of leverage. Now, a really good asset should have what I call easily accessible equity, which means you should be able to access the equity in the form of liquidity. So you should be able to translate that equity, which is dormant, into the liquid form, which is cash. So you should have easy access. A really good asset class should have easy access. Some asset classes have access, but it may not be that easy, such as real estate, which is largely illiquid. But the dividend-paying participating whole life insurance that underpins the infinite banking concept is a highly liquid, easily accessible asset class. Now, still looking on the left-hand side, which is the green side, a really good asset should be able to solve problems. Uh, Thinking about it, every day when we set out to go to work, we are setting out to make a difference in people's lives, and we are setting out to solve problems for one another. Every single thing that we do can be literally tied to solving problems, providing solutions, making a difference, or adding some value. And then on the blue side of this incredibly powerful triangle that I was inspired to design is a really great asset should be an asset that compounds over time, which means compounding in very simple terms is value upon value, layers of value upon value, or layers of growth upon growth that is then subject to multiplication. So it's not just one layer multiplying, but each layer forms another layer on top of the asset, another value layer on top of the asset, and then multiplies, such that at some point in time, you then get to what we call the exponential factor. It hits the exponential factor where you now have accelerated growth as a result of compounding. And I will highlight one of the quotes that is generally ascribed to Albert Einstein, highlighting how this is one of the incredibly powerful forces for wealth building. Again, this infinite banking infinite banking concept machine ticks this box because it's constantly compounding. A good asset should also lend itself to being able to provide some protection. some protection from financial difficulty, some protection from uh, the negative life events that people are faced with. Um, and when you look at it, real estate, as an example, provides protection. That's one of the reasons why I believe that your primary residence is still an asset because it not only holds value and grows value, but it also protects your family and protects you from being kicked out by a landlord. So when I talk about real estate investing, that's one of my really passionate talks. I usually say I'm one of the few real estate investors, 25 years under my belt, who believes that your primary residence is an asset. And I say it because if it is properly structured, properly used, it really will tick all these boxes. So, last but not the least, a good asset should be transferable, should have a mechanism by which it will be transferred from one generation to another. And a really good asset should be one that you can integrate with other asset classes. And I talk about that in my framework for wealth building. So, having said that, we now know what an asset should be. We will go straight into the framework for wealth building. I love to talk about this often. I wouldn't be able to go into great detail today because we'll be focusing on just one asset class. But I put together using a multi-family apartment building example, I put together 9 asset classes grouped as 3 triangular building blocks divided into the structure. Having been exposed to land development, it has inspired me to highlight or design this wealth building framework where you have foundational asset classes, which I describe as the footings and foundations. That's a human asset class, insurance asset class, and geographical real estate asset class. And then you have the walls and contents, which is active and passive businesses, paper and digital assets, whether they are public in the stock market or privately owned, and then investing in commodities of value, which include things like gold, silver, diamond, platinum, oil and gas, agricultural products, and so much more. Those are commodities of value that will also qualify as assets, whether they have the 10 qualities of an asset or whether they have 5 or more qualities of an asset. And then last but not the least, uh, in this framework that I encourage people to use is what I call the ceiling and the roof. Every house, every building has a ceiling and a roof, and the ceiling and the roof, on that there we have 3 asset classes: the intellectual property asset class, systems, structures, and strategies that need to be put in place, in my opinion, and an asset class in themselves. And then the integration of multiple streams of income, getting to the point where you have a fully integrated system where income is being generated by the insurance asset class and is flowing into the real estate asset class. And then from the real estate asset class, income is being generated that flows into an active or passive business. And then from the active or passive business, income then flows into the acquisition of paper or digital assets in the stock market or privately. And then from there, income flows from there to acquire some commodities of value or to swing trade some commodities of value. And then from there, income is also generated into intellectual property that has the potential to outlive the investor. Um, so that as a strategy is also an asset class in itself because some have gotten to a point where they have mastered it. Some have gotten to a point where they're using it incredibly to make a difference in people's lives. So today we'll be focusing on the insurance asset class. Everything I have said so far is a preamble, and that's why I said I felt I needed to do this pre-recorded session because the pre-recorded session would give me the opportunity to really just spend some time and expatiate on some of these concepts for people who may be watching this later. So first, I would highlight the fact that for the insurance asset class, um, insurance can be divided into professional life events insurance, and these are concepts that I came up with under the Triangles of Impact series, or could be personal life events insurance, or could be property life events insurance, or could be spiritual life events insurance. So I came up with these four categories of insurance. And I'm not just talking about life insurance here. Insurance as an asset class really cuts across many forms of insurance. And time will not permit us to go into all of them today, but I will touch briefly on them and why they are an asset class in themselves, depending on what kind of insurance you are looking at. Again, bearing in mind the qualities of an asset um, as we go along. For professional life events insurance and personal life event insurance, you need things like disability insurance, critical illness insurance, medical liability insurance or professional liability insurance, malpractice insurance. If you're a profession, depending on where you work, you might need special kind of insurance, like insurance agents usually need the errors and omissions insurance. I believe realtors also need that kind of insurance. So insurance that provides protection, insurance that is guaranteed to solve a problem when you need it, insurance that is guaranteed to hold some capital that grows. Most insurance products will hold capital, which is your premium, and the insurance provider will grow that premium to a point such that when you need it, or if you get to a point where you need it, they're able to deploy it on your behalf. This is the general principle of insurance. And most insurance products have three key elements. The very first, and again, if we use a triangle, if you just imagine a triangle, at the apex of the triangles, you always have the insurance owner or the policy owner. So you have an owner of the insurance, and the owner of the insurance is the one who is always responsible for paying the premiums. And then you have at the left-hand base angle, you would have the insured, which is a warm body. You always need a human asset class or a human being, which I often describe as a warm body that is usually insured. Every insurance product has these three key aspects to it. And then at the right-hand base of the triangle, you will have the beneficiary. So there would always be a beneficiary of that insurance. There are some insurance products where you would be the policy owner, you would be the insured, and you'll be the beneficiary. Classical example would be one of the ones in the property life events insurance, like car insurance, like home insurance. You would be the owner of the policy, you would be the owner of the insured car or product, and you would also be the beneficiary. But things like life insurance, you would have you being the owner or your corporation, your holding corporation or professional corporation can be the owner. The owner pays the premium. The owner makes the decisions about who the beneficiary would be. You, as the director of that corporation, or you, as the policy owner, would be insured. And then you can designate who you want the beneficiary to be. Because for life insurance, you cannot be the beneficiary and be the insured because the greatest ROI in a life insurance product is the death benefit. And I use the word ROI again because, I'm an investor and I always have to think about return on investment. And I always say the ultimate return on investment in a life insurance product is the death benefit. But using the dividend, specially designed, dividend-paying participating whole life insurance, there are many other benefits apart from the death benefit. So we'll talk about the death benefit today, but that's not the focus of today's discussion. And I'll talk briefly also about spiritual life events insurance. I think this is incredibly important. I know there'll be people of various faiths, various beliefs on the call or watching this later. And I want to say, I have the utmost respect, utmost regard, appreciation, and acknowledgement of everyone and the diverse faiths and beliefs that people have. And I commend people, that people believe in something that is greater than them. And for those who don't even believe in something greater than them or in a supernatural, being like God, like Christ, there's some people who believe in themselves, but they believe in something. So believe is a place to start. But I also encourage people, especially because we have been blessed by God to have a mind that is able to think, that is able to explore. And so, usually, what I encourage people when it comes to spiritual life events insurance is to do a comparative analysis, what we in the science is called a meta-analysis. I've done a meta-analysis of the various faiths, various religions, various belief systems, and I have made my own conclusions. Conclusions I made as far back as 36 years ago. And the example that I always give, again, just using myself as an example, hopefully to encourage somebody who'll be looking at this, is that I decided after the meta-analysis that I will stick to Christ, the King and Majesty and the hope of glory, because he's the only one that has had certain things that are, incredibly reflective. One, making certain declarations, which as a psychiatrist, I would say if he didn't know exactly what he was talking about, he would have been branded as having a severe form of grandiose delusions in the time he lived here on earth. He's the only one, obviously, who, has so much reference being made to him. If you do a Google search or a Chat GPT search and say, who's the most influential person or personality of all time, and it will always come back as Jesus Christ, the King of Kings, the Lord of Lords, and the Lion of the tribe of Judah. So it's definitely one to reflect on. He paid the premiums uh, over 2,000 years ago, and he made humanity, everyone, beneficiaries of the life insurance product that we have, which is not just a product that we enjoy while we're here on earth, but is a product that we'll enjoy when we translate from here into the heavenly realm. So I say this again, not to discriminate on other faiths or religions or beliefs, because having a belief and a religion and a faith is a fantastic thing. They have a lot of benefits in helping us to live our lives as objectively as possible. But in the midst of all that, I always say, do not just stick to the religion or the beliefs of your fathers or your forefathers. Take some time to do some due diligence, explore, compare, do a meta-analysis. And if you ever reach out to me, I'm quite happy to share the document that I have, which is tagged or titled as the meta-analysis of faiths, religions, and beliefs. So having said that, the focus of today really is on life insurance as an asset class that is incredibly powerful and can be used to make a difference in your lives, my lives, and in the lives of people in our circle of contact and influence. So, having said all that, I also want to highlight where capital and the need for money sits in the triangle of human forces. And this is very easy for us to reflect on when you think about the three most important things in the world that bring people together, that have the power to bring people together, whether it's bringing people together as a community or bringing people together as in silos, whether it is beliefs and religion brings people together, power and politics brings people together, money and capital brings people together. But we must never forget that these three things too are also the things that have the potential to split people apart. So as much as they have the power to converge, they have the convergence power, but they also have the divergence power, and they have the power to create conflict. As we can see in the world today, you could almost nail down any conflict that we see around the world, either to one, two, or three of these human forces in their various dimensions. Having said that, our focus today is not on belief and religion, is not on power and politics, it is on capital and money. Because capital is extremely important in wealth building, but is even more important in being able to use that wealth to make a positive impact in the lives of people in your immediate circle of connection, contact, and influence, and beyond. So, dividend paying, specially designed dividend paying participating whole life insurance, which underpins the infinite banking concept and process, and which is essential in setting up your own bank branches and buildings. And these are three key features which really form the basis of this presentation today, and that is capital, control, and compound, where leverage sits right in the middle of it. I'll be talking more about this as we go along, but just remember the triple C. Always look for income producing assets that tick these three boxes, where you have capital, generation and reservoir, control, ultimate control, or partial control, or significant control, and where you have compounding working seamlessly in the background while you are fast asleep. I also came up with this really lovely, oops. I also came up with this really lovely reflective design, the cyclical process for capital generation and use. And I'm happy to report that the infinite banking concept using the specially designed dividend-paying participating whole life insurance really encapsulates this entire process. That's why we describe it as a process. So, and I will just walk through it so that you have an idea of what the process involves. So the first part of the process is capital deployment. We know and we all agree that every form of investing requires some degree of capital as a seed. It's just like in agricultural practices, you require a seed. You require something that you're going to plant that is going to grow and that ultimately will require nurturing and will get to a point of maturity where it starts bearing fruit. So if you think about, I'll use a mango tree. I'm a tropical guy, right? Going to plant it. It's got a seed. The seed is going to grow. It's going to become a tree. It's going to require nurturing. And at some point, seasonally, it will produce really lovely, juicy mangoes. So, same thing with this infinite banking concept. You deploy some capital. The capital has to be capital that is affordable, affordable, comfortable, and sustainable. One of the things that a lot of insurance agents do, and I have nothing against insurance agents, but I think sometimes their limited knowledge and experience and exposure makes it difficult for them to articulate insurance products in a way that will serve their clients. And some are driven by commission. So that can be a problem. But essentially, there should be capital deployment that is, again, I would say that it has to be affordable, it has to be comfortable, it has to be sustainable. The good thing about the dividend-paying participating whole life insurance or the infinite banking concept, which leads you to establish your own bank branch and buildings, is that you can start small. You can take out a small policy on your kids, small policy on yourself, small policy on your spouse. And then as your income increases, you take out more policies on the same people. I have a mentor who has 16 policies on one of his children, 16 policies. And he started taking out the very first policy on that person at the age of 16 days. 16 days, the first policy, such that when the child now turned 16, he looked at one of those policies, just one of those policies had enough cash value that had built up in it, way more than the premiums he had paid in all those 16 years. And from that cash value, he was able to leverage that cash value at the push of a button without speaking to anybody on his own terms. And he bought a brand new car for the young lady. So, capital deployment into the dividend-paying, specially designed dividend-paying participating whole life insurance, which is the asset class. And that asset class over time grows seamlessly, grows. Now, we are talking about a mutual insurance company that have been around for over 100 years and have never missed one day of paying dividends since they started paying dividends every year. Of course, they often say the dividends are not guaranteed, understandable, but these mutual insurance companies are so solid that they've been paying dividends for over 100 years. And so they build enough equity in there. And remember, because they're a mutual insurance company, they're owned, co-owned by the policy owners. So every policy owner who has a dividend-paying, participating whole life insurance policy with them then has equity that is growing in it. And that equity is what's described as the cash value. Bearing in mind again that the ultimate return on investment is the death benefit. But while the death benefit will go to your beneficiaries for generational wealth transfer, which is a powerful process, you also have cash value, which is the equity that is growing in the policy that you can use leverage to access. So leverage is that process. I usually say sometimes it's like the heating of ice that converts ice from a solid state to a liquid state. So leverage is what you use to convert equity that is sitting in your cash value into liquidity. Bearing in mind that the asset remains the same and continues to grow, the equity remains the same and continues to grow, but essentially you're just borrowing against the property. You are not liquidating the property. You're borrowing against the property to then create liquidity that you can then use as capital for other income producing assets. I call them the IPA. You use IBC, infinite banking concept, to generate income producing assets. And of course, my favorite is real estate, but I'm also passionately invested in paper and digital assets, commodities of value, intellectual property, and of course, active and passive businesses. Now, this is another incredible illustration that I came up with. I got this inspiration one morning when I woke up and I was reflecting on the uh, infinite banking concept and its synergy with income producing assets. And I came up with this illustration because I started thinking about, again, because I'm a three-dimensional guy, my triangles of impact. And I thought about water as liquid, ice as solid, and gases. And I thought, how does this dovetail with financial issues? And it hit me. As an inspiration, I thought this can be described as the financial states of matter, where liquid represents capital or liquidity or cash flow or income, and these act as seeds that you invest in income producing assets or you invest in an infinite banking concept, specially designed dividend paying participating whole life insurance. It grows in its equity, which means it grows with cash value, and then that becomes an equity state, and then you can use leverage to basically access that equity. So you can leverage it, and then you get more capital that you can invest in other income producing assets, or you can actually leverage that cash value or equity that is in the policy for expenses. And I'll be showing you that in a minute. I'll actually log into one of my personal policies where I will be leveraging my cash value to pay for my taxes this year. As an investor, an entrepreneur, um, I often have taxes that I pay through the year from income that I pay myself. And then I have taxes that I have to pay at the end of the year from additional income that has not been taxed at the source, such as dividends or other additional income, multiple income streams that flow through the year. And so, it's always good to have a reservoir, have somewhere where this money can be parked and grow, and then you access them to pay for expenses, and not just tax related expenses. They can be used for day-to-day expenses, and we'll talk about that process as we go along. So really great illustration. The bit that I liked the most about the illustration and inspiration was looking at expenses as a gaseous state that suffers from evaporation. And this we can relate to, that when you go out and you spend money and you flash those credit cards, the money goes, the money doesn't come back to you. So it's important to realize that, one of the beauties of the infinite banking concept is that it really helps you to be able to route the money that you would normally use for day-to-day expenses route it into your banking system through your infinite banking system, use it to pay your premiums so that you're building capital in the asset and you're creating equity, and then you can simply leverage that equity to pay for those expenses. Because the truth is, whether we agree or not, we are always financing everything that we need. We will either use cash that we have to finance it, which means we lose the opportunity cost of that cash, which means once you spend the cash, you've lost the ability to invest that cash. So for people who love to buy things with cash, remember that money could have been invested in an income producing asset, but once you've spent it, it's gone. Or if you don't pay cash, you will use credit, which means you will use borrowed money, whether it is borrowed money from a credit card, or whether it's borrowed money from a line of credit, or whether it's borrowed money from a loan. We are always financing things either with cash or with credit, either with cash or with credit. So if that is the case, then people should be comfortable financing things with credit or financing things with leverage, right? So you leverage your policy to finance things and use the cash that you would otherwise have used to finance it to pay the premiums, use it as capital, invest in the asset, cost the asset to keep growing, and then just leverage. So that's a cycle in itself. Take the cash that you would normally have spent, use it as capital, then allow the assets to grow that capital, and then you leverage the equity to then use it to pay for the expense. That way you're paying for your expenses tax-free, and you're using those expenses as capital. You're using those expenses as a seed that you're investing in an income-producing asset. I hope that this is not complicated. I would greatly encourage and appreciate it if everyone can take a screenshot. I'll just minimize this. Take a screenshot of these books, Becoming Your Own Banker. Get a copy. Absolutely necessary. Get a copy from Amazon. You can either get the audio version, which is the one on the right, from Audible, or you can get the written version from Amazon. Read it, underline it, ask questions. I've got a WhatsApp group. If you want to join the WhatsApp group, scan the QR code. It will come up again in the course of the presentation, and I will add you to the WhatsApp group once you've bought this book. It's nice to have a community of, I call it the AAA community of aspiring infinite bankers, a community of active infinite bankers, and a community of authorized infinite banking practitioners. That's the community that I have formed through a WhatsApp group, so that you have a group where even if you're just aspiring, you're still sitting on the fence, you're still saying, is this for me? Is it not for me? That's fine. But get these books. They will make a big difference in your lives. They have made in our lives, and we truly appreciate the opportunity to be able to read what the late Robert Nelson Nash had written. So I throw this in here for good measure again, just to remind us that having said all that I've said above, we should invest more in assets. Specially designed dividend-paying participating whole life insurance is a powerful asset that creates bank buildings and branches that you can use for all your banking functions in life. And these then become your own banks. When you take money out using a policy equity line of credit or a policy loan, and you pay back the loan with interest, you're paying the interest to yourself, you're paying back the loan to yourself, and part of that interest comes back to you in the form of your dividends at the end of the year. Now, we move on to the next question. And this is a tripartite question, which I describe as the what, who, how, why, and when. This is a triangle of questions that we must always ask ourselves for everything that we set out to get involved in life. We must ask ourselves, what exactly am I thinking about doing? Why am I thinking about doing it? When am I going to do it if I decide to do it? Who are those that I need to consult with, to be supported by, to be mentored by? And then the last but not the least question is, how do I go about doing it? And in this case, referring to the infinite banking concept using the dividend-paying, participating whole life insurance strictly with a mutual insurance company, what I describe as opening your own bank buildings and branches. So if you're in a family of four or family of five, three kids, uh, father and mother, you could potentially have five bank branches. That is five bank buildings. And those bank branches will serve as capital depositors, growth of that capital, protection from the ultimate return on investment, the growth in equity and cash value, easy access to the cash value for anything you want to do in life, any investment, investing in income producing assets, covering certain expenses. And you would also have those benefits. If you remember the benefits that I talked about here, storage of value, growth, easy access, generating income, whether it's in pre-retirement phase or retirement phase where you can collateralize the policy and you can basically pay yourself a tax-free income or salary from the policy for the rest of your days. And then whatever is borrowed against that policy will be deducted when the ultimate return on investment, the death benefit is paid. That amount with the interest will be deducted and the residual amount will be paid to your beneficiaries tax-free. So it's a win-win situation. You get to use it while you're alive and you get to pass on the residue or the residual value or income of it to your beneficiaries who can then repeat the cycle like the Walt Disneys, like the Rockefellers, like the Rogers of this world, the ultra rich and wealthy have been doing for years. And even all the banks, the five banks in Canada and many of the big banks in the US have what we call bank-owned life insurance. And it's usually a dividend-paying participating whole life insurance policy that they take out on their C-class executives with policies that will pay out substantial amounts of tax-free income when that executive passes on, even after they've retired. And also, the bank has the ability, being the owner of the policy, to leverage the policy at any point in time and to use it for their many banking functions. So the question here is, what are we talking about here? We're talking about a concept and a process that empowers you to build capital. We're talking about a process here that empowers you to generate income. We're talking about a process here that is easily accessible. We're talking about a process that provides solution. We're talking about a process that can be integrated into many other income producing assets like real estate, like paper and digital assets, like active and passive businesses, like intellectual property. We're talking about a process here that allows you to protect your loved ones. We're talking about a process here that leads to the transmission of generational wealth. We're talking about a process here that an asset here that you can leverage anytime. We're talking about an asset here that continues to compound while you're fast asleep. And then why? I think why is an easy answer because first and foremost, we have many whys. And one of our greatest whys is our financial needs, our needs, general needs, important needs, food, clothing, and shelter for ourselves and our loved ones and all those that we are assigned to, and the pursuit of our purpose here on earth. And then when? And I would say now, start now. So if you're watching this, reach out to me, sign out those QR codes, and I would provide guidance and mentorship. No pressure. I'm not an insurance agent, so there's absolutely no pressure. You can ask 1,000,001 questions, which you must, because due diligence is essential. And being able to start, especially if you have the runway that we didn't have, which means you're able to start at a younger age if you're listening to this, regardless of where you are. Even if you're a student, you can start with a small policy, a policy of maybe $100 a month, $1,200 dollars a year or less. But just get a policy in place that starts growing. It's like opening a small bank branch with a small building, and then you add more. Later on, you can take out more policies on yourself. And remember, to be able to take out a policy, you have to be healthy. by the insurer's standards with medicals. And there's no guarantee that you or your beneficiaries will always be healthy. When people say, oh, I'll take term and I'll decide that later, I first say, don't even take term. Start with something that will be there for you permanently, because term insurance will expire when you're most likely going to need it the most. So why take term? And you get absolutely no benefits from term. Like, you can't leverage it. You can't walk to the lender and say, I've been paying you this premium for so much. I know you've used it to invest. There's so much money in there. I want to leverage it. I want to borrow against it. They'll be like, sorry, this doesn't have that benefit. So I hear a lot of people say, buy term, invest the rest. And I say, buy the specially designed dividend-paying participating whole life insurance, set up the infinite banking concept process, and then leverage it, pull out your precious cash from the leverage of your policy, and then use it to go and invest. That way you're killing two birds or three birds or four birds with one stone. Anyway, I came up with a term called PLOC, which is my trademarked term. Again, from being a real estate guy, real estate doctor, so to say. And the term I came up here with is the policy equity line of credit, because I've used the HELOC. We have a HELOC attached to our house, which is like an ATM machine that is attached to a house that has served us well for investing. And so a PLOC is a policy equity line of credit that has come in very handy. We've used it, for real estate investing. It comes in handy for other investings. And what I'm going to do at this point is I'm going to uh, log in to my Equitable account, and by logging into the Equitable Life account, I am going to show you, these are live accounts. What I'm actually going to do today is I'm going to generate a policy loan. You see how I generate the policy loan. And as I generate the policy loan, um, I will click the buttons, click, 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 click. I'm not speaking to anybody. And that policy loan is going to be in my account in 5 to 7 business days. And the policy loan I'm going to generate today is going to be about $30,000, which I need to pay my taxes this month. Leave some money back in there. And then, of course, as income flows through on the personal side through the year, I'll dump it back into the policy, A, to pay the premiums, and B, to just replace the loan and the interest. So I'm just paying myself back. I'm paying back into my bank. So I want to show you that. I will also show you a corporate account. I'll log into the corporate account too. That has some substantial cash value. We've used it for real estate investment before, and then we've replenished it. We've paid back the interest, comes back to us as dividends. So that's full. I'm not using it right now. I have a number of investment opportunities coming up soon, but I would just show you how it's done. It's at the click of a button, tap, 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 and the money's in your account in 5 to 7 business days, and the policy is still intact. The asset is still intact. It still continues to grow. It's exactly just like a real estate um, property, where you can refinance the property, which we call cash out refinancing, or you can attach a HELOC to it. So you're not selling the property, you're just leveraging the equity that is in it, and that equity continues to grow even after you've leveraged it. The only difference in this case is that you are in absolute control. It's on your own terms. You pay back the loan when you want, you pay back the interest when you want, you do whatever you want with the money, no questions asked. Of course, I always advise people use it more for investing in other income producing assets so you can create a multiplication effect. But if you must use it for emergencies, use it. If you must use it for expenses, use it. Just make sure you're an honest banker with yourself, that you always return the money and you always return with interest, so that you always have that reservoir of capital that is building every year, multiple layers that you can tap into. So once I do this, we'll take a break. Let me just stop sharing my screen at this point so I can, let's go in here. So I've stopped the screen sharing. Let's see. So I will log into the account and then come back to you in a minute. Okay, so what we're gonna do now is go back to share. Just a minute. I've logged into. So I'm going to show you the my personal account. So we have a number of bank branches and buildings, which is a number of policies, both on the personal side and the corporate side. The corporate side, which you can have it on your holdco can be the owner, your medicine professional corporation or other corporation can be the owner on the corporate side. So you use your retained income as the capital that is deployed as a seed to start the policy, start the bank branch and building, and then use the infinite banking concept as you will. Or you could use your after-tax dollars as the capital for the personal policy, ones that are taken out with you as the insured or with your beneficiaries or children as the insured, and then you're creating multiple bank branches that they can then access. Okay, so let's go here. Let's share my screen again. Let's see. Okay, share. Okay, so it's floating controls. Okay, hopefully, everyone can see this. So you can see my full name at the top, so you know that this is my policy. I'm the policy owner. I pay the premiums, and I have just gone through the value section. So hopefully people can see this. And so what we have here is what is called the Equimax Wealth Accumulator Whole Life Insurance Policy. Remember, this is a specially designed dividend-paying participating whole life insurance that was designed by an authorized infinite banking practitioner. And the infinite banking practitioner that I used was Sablo Gill, who has a vast experience in the infinite banking concept, and he's the founder of Verity Life Solutions. I'm actually going to be having a webinar with him later today. So he would definitely be one that I would definitely recommend for people to engage with, to get more knowledge, or to set up their own policies or their own bank buildings and branches. And this is a policy that he had put together, one of the policies that he had put together for us. So this is one bank building and branch. It's a policy that has a base premium. I think a bit, and I'll show you some of the numbers later. A base premium of about $12,000 per year, and as a guaranteed base premium that is required every year, but then has this component which I call the turbocharger. So it has this component where there is about $38,000 that can be paid every year. It's optional, but that turbocharges the cash value, and that really helps to build cash value exponentially so that we can tap into it when we need it for the living benefits or the pre-retirement benefits, of the infinite banking concept or process. So in this case, what I'm going to be doing today, hopefully you can all see the screen. It's a fairly simple platform, simple but powerful. It's always nice when a platform is simple. You log into it. This is what you see: your payments, your coverage, the beneficiary, your advisor, the owner of the policy, the values. I'm going to focus on the values here. We do have the dividend option. Instead of taking out the dividends that were paid every year, and paying tax on it. We just ask them to use the dividends to reinvest the dividends. So most people understand the power of dividend reinvesting, DRIP, dividend reinvesting plan. So we set up a dividend reinvesting plan. Instead of living on those dividends at this stage in life, we just want you to buy more insurance, create more cash value. Later in the presentation, I will show you another illustration that I came up with called the onion layered power of compounding in the infinite banking process. How you have base premium, the inner layer of the onion, then you have the next layer, which is the dividend paying component, buys another layer, buys more value. Then you obviously have your EDO, which is the turbocharged premium. It's an optional premium, but the more you pay it, the more you're creating another layer, another onion layer, and then you have this compounding effect. So you have your base premium, then you have your EDO, which is the turbocharger, then you have your dividends that are paid, and then over time, after about 5 to 10 years of holding the policy, you would just be like, my word, this begins to compound exponentially with no fluctuations. So it's not subject to the stock market. It's not doing this volatility dance. It's just a constant growth that you can access easily. Now, let's talk about access. There are three key things, three key benefits of this infinite banking concept that is underpinned by this specially designed dividend-paying participating whole life insurance. The first is liquidity, and I'm going to show you liquidity. Liquidity essentially is the ease of access to cash, right? If you can access cash like this, that's liquidity. Easily accessible equity is also important. When you have an asset, it can either be illiquid or liquid. It will definitely have equity if it's an asset. If you haven't used up all the equity, or if your equity isn't locked in. So in this case, there's some equity in there, and I want to access it. Easy access to equity. And then the third important component is cash flow. So we're going to execute the three now. You're going to see liquidity, you're going to see easy access to equity, and you're going to see cash flow. And I'm going to pull out $30,000 from this loan value. So you can see here, it says here I have a cash value. I had actually taken out a policy loan in the past, so I have an outstanding policy loan amount of $36,000. And guys, ladies and gentlemen, this is a personal policy that I own. This is a personal bank branch that I own. And this loan amount of $36,893 does have interest, 6.5% interest that I pay on it. But that interest goes to me, goes to my bank, goes to the pool, because I'm a co-owner of Equitable Life. And every year, part of the dividends that I have is part of this interest that I've paid. So the interest, not all of it, but a chunk of it comes back to me as dividends. That's number one. Number two, this 36,000 that is outstanding here from a loan that I took out for other income producing asset opportunities, this loan does not show on my credit profile. Absolutely not. There's nowhere you would take a loan like this from a third party that will not show on your credit profile or affect your credit profile. That's another incredible benefit, one that I don't underestimate because I do a lot of real estate investing and I know what it's like for you to invest using your name, your personal name, or even sometimes corporate that then shows on your credit profile. It creates what I call the financial drag effect. So let's engage liquidity, easily accessible equity, and cash flow right now because I need to pull out 30,000 so I can send it to CRA to pay my taxes for this year. So, okay, so this is what we do. These are all the values there. So that's the loan balance. This is the cash value for the 1,000 that is there. Guaranteed cash value is the cash value that is attached to the first layer of compounding, which is the base value. This loan surrender value here is what's attached to the other layers, which is both the dividend layer and the EDO layer. That's the surrender value, and this is the loan value. Now, of course, when you are using this process, this concept, you have access to your cash value up to a certain limit, just like in a real estate refinance or HELOC. The bank generally does not allow you to access the entire amount of your cash value. It usually allow you to access either 65%, 75%, 80%, or 90%. Now, if you took this policy and went to a third-party lender, which is what's called collateralization, or usually what's called the immediate finance arrangement, you may be able to get more out of the cash value that you have there. But the immediate finance arrangement is usually for high income earners and is usually a situation where you now are losing control because you're now engaged with a third party lender. They have their terms and conditions. They want you to pay interest every month and they will assess you. They will ask for your financial DNA for sure. So without talking too much, I know I love to talk, so you have to forgive me. I'm a psychiatrist at the end of the day, so I love to listen, but I also love to talk. So this is why I say it's at the click of a button. So we're going to request a loan. So I click this. It says request a loan. Okay, so that's the total loan amount that I can take. This is the interest I'll be paying. Remember, again, the 6.5 interest. People get hung up on this interest. This interest is going to our pool, going to my pool of money. I'm paying myself this interest because I'm a co-owner of Equitable Life, right? So, and part of it is going to come back to me as dividends. So I'm taking 30,000. So 30,000. I want 30,000 in my personal bank account within 5 to 10 business days. So with this loan, it's asking, will this loan be used to purchase a new life insurance contract? In other words, are you taking this loan now to buy another bank building or branch, right? So I'm saying no in this case because that's not what I'm using it for. I want to use it to pay my taxes for the last year. So I'll click continue. Payment method, you can either direct deposit to my bank account, which is what I'm going to go with. The details are already there because I've used this multiple times before, or direct deposit to a new bank, which means I need to put in new bank details and get that verified, or I can ask them to mail me a check. I'm going to go with my bank, right? Okay. And then uh, all details in there. So that's, remember I said it's click, 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 click. 5 clicks and the money is in your account. Don't have to speak to anybody, right? That's why I call this a policy equity line of credit. It's there. I can tap into it. I can pay it back. And I do not have to pay the interest every month. I can pay the interest anytime I want. I can pay back whatever I want. I can pay it whichever way I want. No questions asked. If I decide never to pay it, it just gets deducted from the death benefit years from now. Okay, but the interest continues to accrue, and then you're not being an honest banker because you're going to run your bank aground if you keep taking out policy loans and you don't pay them back. You want to keep recycling and create a reservoir that you can always access when you need it. Okay, so click continue. It asks you some basic questions, tells you that obviously there's interest going to read on this. And tells you again that you do not want the policy to lapse. You have to keep paying the premiums because if you take policy loans out and you're not paying the premiums, it could lapse. So I would say I agree. I agree to those terms. I click continue. It's basically telling me, I've requested $30,000 by direct deposit. It's going to be in my account to 5 to 7 business days. And I am going to click submit. Okay, so we have all that. Tick, 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 tick. Tick, 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 tick. 5 ticks. And the last tick is done. That's it. That is it. When I found out that there was a way in which I could leverage the equity or cash value that is growing in this policy without having to speak to a representative of the insurance company that I co-own, it blew my mind. Because I've been investing in real estate for such a long time. I've refinanced many buildings, what we call refi, that's cash out refinance. I've had HELOCs attached to buildings, but I know what I usually go through. The lender, third party lender, usually would ask for my T4, my T1, my T2, my financial statements, basically like a financial colonoscopy for every time you want to request money. Now I have just requested a $30,000 loan, policy loan against the cash value of my policy while my policy continues to grow exponentially. So I'm just going to stop sharing my screen again and then log into our corporate account, so I can show you that. And then after that, we'll take a break and then we'll come back to part two of this session, because I think I've been talking for over an hour now. So there'll be part two where we'll kind of delve into what I call the benefits and then the basics. And of course, looking at the banking function itself. So just bear with me. Let me minimize this again. And oh, just wondering if did I even share my screen when I did that? Oh dear. I'm not sure if I shared my screen. I thought I did. Anyway, well, what I'll do now is I'll open the corporate account and do the corporate account. I'm not going to pull out any money from the corporate account right now, but I'll share the screen and just walk you through it. Sorry, I've been talking for a while. I wasn't sure if I was sharing the screen. This is part of the problems with a pre-recorded session, because I couldn't get any feedback from people to say if my screen was being shared or not. So uh, just logging in now. Okay, let me share the screen again now. Yeah, I don't think my screen shared the last time. Just a minute. For those who are watching this, sorry about this. Okay, let's have this now. Zoom is always a bit tricky. Yeah, you see, I think I didn't when I requested for that. Okay, okay. Now I can see that everybody can see this bit, but I don't think you actually saw when I was talking about the other bit. I don't think you saw that, so that would be an interesting one. Okay, but we're here now. That's what matters. Okay, so anyway, so I've logged into the corporate account. I'll go back at the beginning of the second session. I'll go back and I'll log into the my personal policy. I talked about it. Hopefully that's all been recorded, and I'll log into it again. But essentially, this is what I did. I logged into it, went to the value section. Again, it's a dividend paying option, so it's dividend reinvestment plan. It buys more insurance. The dividend can be paid to me, but if that happens, I'll pay tax on it. But as long as it's buying more insurance, it's creating that extra layer of value and growth. and it's compounding and expanding over time. Got quite a bit of cash value here, about 239,000. Um, and the loan amount that I can leverage against the cash value is about 208,000. Um, and has a guaranteed cash value, which is usually attached to the base value. Got some excess cash that is sitting in the deposit account, which would be used to pay the premiums when that comes up. You know, we've used this before. We've used it for real estate investing. So we've, you know, taken out loans, repaid the loans. So the loan balance is currently zero. This is the process. This is what I did when I logged into the personal bank branch. So this is a corporate bank branch or corporate policy. So request a loan. This is what I did. Clicked here. Tells me the maximum that can be leveraged, the interest rate, which is 6.5% that will come back to me for sure, partially as interest recapture because this money is all going into a company that has been around for over 100 years that I co-own. And here, if I put in 100,000, so put in 100,000, if I click continue, where it tells me where do I want the money to be paid. I click here that I want the money to be paid into the business account. If I click continue, it tells me what conditions, basically just that interest is going to read on it. I agree to that, and that I have to keep paying the premiums to keep the policy in force. I agree to that. And then click after that. Then it asks you a basic question here, which is that does this agreement require one signing officer? This information must match that on the records. So in this case, it requires one signing officer. It requires one signing officer because I always ask you if it requires multiple signing officers for corporate policies. If the corporate policy will ask you this question, for the personal, I didn't ask that question. So obviously, in this case, I've said, you know, I would say no. One officer signs because the directors are just my wife and I. And then review the request, click review the request. Then it just goes on to the next stage. And then the next stage is confirmation. Just hold on 1 minute. Yeah, so if I click that, it will tell me to review the request. So that's Ripcore Holdings Inc. Gives you their number, tells you the amount that wants to be pulled out. And then if I click submit, it would basically move to confirmation, and then I click done, and that's it. So I don't intend to pull out 100K here, but I just wanted to show you that if I wanted to pull out 100K, which probably do at some point for the next investment opportunity or pull out more, then it's there. I literally don't need to speak to anybody. I can pull out this money on my own terms. Yes, interest will be reading on it, but I don't have to pay the interest every month. I can pay the interest when the investment has matured. I can pay the interest in 2 years, in 3 years' time. I can pay the interest anytime. If I was using this in my retirement phase, I can decide I'm not paying the interest and just let it through, or I can collateralize the policy with a third party lender and just set up almost like a annual draw. Just draw from the cash value and just let the interest accrue. You know, dividends can also be pulled out at that stage. So it really is a powerful tool. So I'll go back here because I'm not drawing any money from here. So in the next session, I'm going to pause here, but in the next session, I will log into the personal profile again. I think this is a corporate profile. So I'll log into the personal profile again, my personal profile, and just use that as an example to show you. So I think I have stopped sharing. Okay. So screen sharing has been stopped. So I think I didn't share that personal profile when I was requesting for the $30,000 loan, but I'll reshare that again. It would show that that has gone through. So let me share my screen again. This is just going back to the slide deck. Sorry, this floating. So just go back to the slide deck here. So this is where we stopped, and we'll pause here. In the next session, next pre-recorded session, I will continue by taking a look at what I've talked about quite a bit here, which is the onion layered growth of value, in IBC. That's where we start from. And remember that one of the most popular sayings has been attributed to Albert Einstein, saying that compound interest is the eighth wonder of the world. Eighth wonder of the world. He who understands it earns it. He who doesn't pays it. So we'll start from there at the next session. So yeah, for now I'll take a break here, and the next session will probably be after the webinar that I would have with Sablo this afternoon. So thank you very much for listening, and I will see you all later. Cheers.